Hello and good morning. You are watching Core Finance. I'm Charlie Gibson. Now, as we all know, in the world of mining, there are slings and arrows of outrageous fortune. There are ups and downs, and sometimes when a company's share price is down, sometimes it's for a good reason, but sometimes also it's a tremendous opportunity. Well, one company that might fall into that category is KEFI Minerals. KEFI has been in Ethiopia since 2013, and its current project, which it's bringing it into development, is Tulu Kapi, and it bought Tulu Kapi in 2014. So it has a history and provenance in the region. Since buying the asset, it's produced a feasibility study. It's then optimized and maximized that feasibility study, most recently in 2017 this year, and in round numbers it needs $200 million in capex to get it off the ground, and it has closed that gap now down to 20. So it's effectively raised 180, or it's secured commitments for that 180, and there is 20 to go in both equity and mezzanine form. Well, joining me now from the company is its executive chairman, Harry Anagnostaras-Adams. Harry, very good morning to you. Thank you very much indeed for joining us on Core Finance. Now, I talked about the slings and arrows of outrageous fortune earlier on, and you put out an announcement earlier on this week, didn't you, on Monday about the financing and how it's going. And since then, there's been some noticeable weakness in the share price. Shares have fallen from 4 pence, round numbers, to 3 pence. And can you explain that?
Not really. I'm disappointed, obviously, but I suppose my only rational explanation, at least from my perspective, is that expectations were that we would announce something better. From my side, we weren't putting out what we thought was a negative announcement necessarily. We've still got the same production startup target dates of the end of 19. We've got all the consortium working very hard, to execute the financing. And we've tabled all the documentation for approval by the government, which we expect next month. I'm on call, really, to be called down to hopefully wrap it up. So I suppose some people just expected us to say the money's in the bank and we're ready to start construction tomorrow, but that was never going to be the case. And so I was a bit surprised, to be honest, and disappointed for shareholders, but we just move on.
Yeah, so in your mind, it's a case of the market was perhaps hoping for something else, and the fact that you weren't running ahead of expectations obviously disappointed some shareholders.
Yeah, I mean, I can only assume that people, some shareholders, when you add up the amounts of money that are turning over in the share market, it's always at the margin. I suppose it affects the share price. It's not a lot of money turning over, but nevertheless, the share price has gone down surprisingly a lot, on the back of what we thought wasn't a negative report. We are actually planning to close up all the arrangements and trigger execution for drawdown in the new year. And we're shuffling all our arrangements with our contractors, Ausdrill and Lycopodium, with the government and with the bond providers that are being assembled. All the people, all the execution teams, if you like, the lawyers and the other people involved are all working on the same timetable and working hard to make it happen according to our plan to be commissioning at the end of 19.
So can you just say, what are the key catalysts between now and that commissioning date in terms of finances that needs to be raised? What's the timetable on that, do you think? And when you're breaking down ground, construction period, when you're commissioning, when you're in production?
Well, working back, if you like, to achieve the targeted commissioning end of 19, you've got to start your mining side about 6 months earlier, because the ore is very close to surface. It doesn't need a lot of time on the ground for the mining contractor. But that means you have to give him his notice about a year earlier than that, because he has to order his equipment and start planning his people mobilisation. So on that mining side, middle of next year, to give him the notice to the contractor so that they're on the ground a year later and ready to start building stockpiles and so on from the middle of 19. That's one thing. On the construction side, you've got essentially a 23-month build project, which means handover of performance guaranteed nameplate capacity, and targets to do it quicker, but that's the base contract. So that would commence at April, thereabouts next year, and that would mean 23 months later, putting aside the targets to achieve things more quickly, one gets handed over nameplate capacity producing plant. Coming back from that, that means that one should be triggering now, as soon as the government comes through in the next month, pre-works, so that from the beginning of 2018, the detailed engineering, procurement, quotations and so on are being conducted by the construction people. So we've covered mining, we've covered construction commencing pre-works, some have actually already started, but all of them by the beginning of 18. Then you've got the community, needs to be given notice and resettlement activities, preparation of the new lands. That all would have to start as soon as the government says go. So that would start also beginning of January. Some preparations have already commenced there as well, but the whole lot would have to be triggered beginning of January to make that timetable. Then you put finance in next to the whole thing. We need to be drawing down as soon as possible around the end of March into April, early May, around then, because if you draw down too early, you start repayments, exactly 30 months later. And obviously you have to draw down by May in order to facilitate the mobilisation of contractors and so on. So we're talking really finance drawdown around the end of the first quarter, early the second quarter, and all the preparations in the meantime to make sure we're sort of hitting the ground running from the moment that all the money is sitting in the bank. Long-winded answer, I'm sorry, but there's a few moving parts there. On the equity side, or the non-debt side, if you like, the last piece of the puzzle is to put in a $20 million piece, which is equity, mezzanine / equity, hybrid structure, whatever is least dilutive for shareholders. Could be at the project level or at the intermediate company level or at the parent level. Obviously, with the share price having weakened, it elevates the work we should do on project level and mezzanine style rather than equity style. So they're that's my reaction, if you like. One can't sit around. The share price came off, so we put more effort down into mezzanine style and project level for the 20 million.
So when do you think, at what point, what's roughly the date, do you think, at which you make the final decision, say, yes, we're going ahead?
As soon as the government comes back and says it's all clear, we have to start making decisions, and we will start preparing new land for the community. It's not a lot of money, but it has to be prepared because it's a critical path item. And we have an arrangement with the construction contractor, Lycopodium, that they will commence works. We have they've made a commitment to the company of up to $2.5 million to do all these works before all the money comes in. And that's already started. They're up, for like the best part of about $1 million already flowing. So they're working. So that as soon as all the money's in the bank, they don't lose any time. So in terms of full commitment, to answer your question about, when are you fully committed, there's no turning back, it'd be before the end of the first quarter, because at that stage you've got commitments and then you have to actually line up, draw down into escrow accounts and so on. So it'd be, towards the end of the first quarter, it'd be, if you like, no turning back.
It's significant, isn't it, that you said in your announcement, I think, that there's this $20 million piece of the jigsaw that you need to finalise. But that doesn't need to be equity at the parent company level, does it? There are several options, of which that's one. But it could be mezzanine, it could be a form of streaming. There are many ways of skinning this particular cat.
Well, that's what I was trying to allude to. The obviously, given that there's a project company deal already, project level deal, with the government, that's effectively the government's putting in $1 million per percentage point, you could say. That's the valuation of the equity, and that's a legally binding committed transaction. The parent company is valued so low in a stock market sense, if you like, that it would be far less dilutive to do more investment at the lower level or at the intermediate company level, below the parent and above the project company. So yes, any opportunities we have to do a good deal, whether it's mezzanine or straight equity down at those levels, is now prioritised because having said all that, I think that at the moment, at least my perspective, and time will tell, but I think that at the moment there's a sort of a skittishness in the retail sort of trading of the stock about how real is it, how does a company raise so much money from such a small base, and so on and so forth. I can say to you that two things which I think are relevant, which gives us heart and gives all this consortium heart. Why would a Lycopodium or an Ausdrill or a government, be putting in all this effort if they weren't comfortable or confident that all this thing was possible? A, because we all eyeball each other, and we actually, there are inquiries being made of the potential bond investors. They're being consulted, and so we're doing our best to make sure everyone has their eyes open. They'll have to do their proper sign-offs, but everybody's fully informed within a confidential consortium. That's one thing. Secondly, they're all A-League players. All these people are very experienced, have their own balance sheets, governed organisations, listed and so on. Thirdly, clearly the skittishness will go away when the commitments are made. So whatever the price is today, for instance, insofar as the capital funding has very limited relevance to the price that will be when all the commitments are made. So it's unfortunate it's low today, but the key price, frankly, at the lowest project level or the intermediate level or at the parent level, the key price for setting the price of equity capital is the price when you raise all that money. And that's not the price that it is today, because the skittishness, if you like, is there because deals haven't been committed in ink, and when they are committed in ink, the skittishness goes away.
Harry, thank you very much indeed. I'm afraid that's all we got time for, but
Okay.
thank you very much.
Did that make sense?
It made absolute perfect sense. Thank you very much indeed. Ladies and gentlemen, that was Harry Anagnostaras-Adams, the Executive Chairman of KEFI Minerals. As I said, mining is to some extent a world of ups and downs and slings and arrows of outrageous fortune, but KEFI Minerals, and the reason we think there's an opportunity there is if you look at the company at the moment, market cap is probably about £10 million, let's say round figures, 13 million US dollars, and you're buying an attributable resource of about 2 million, so that's what's that, $6.50 an ounce, and you probably couldn't find that sort of resource for that sort of price. So that's why we think it's an option, it's an opportunity. Go away, do your own research, as they say, and take a look. We'll be back as soon as we can. We'll bring you more opportunities and more ideas here on Core Finance. In the meantime, it's me, Charlie Gibson, signing off, and you have a capital day.